Inflation is taxation without legislation. Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? How can investments in safe haven assets like physical gold and digital decentralized technologies like Bitcoin be used to counterbalance this constant erosion of our purchasing power? Be sure to stay until the end of the video, where we will give you 2 sound investment options, each with their own set of advantages. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator to discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk. We will hear from economic analyst and author Mike Maloney, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner, macro analyst and investor Lyn Alden, and CEO of Shapeshift, Erik Voorhees.
When examining its specific properties as money, most ways fiat is unimpressive. First, it is not scarce. It is systematically created out of thin air, with no limit on supply, nor can supply even be known. Fiat is willed into existence by politicians and banks because printing money enriches the printer at the expense of the public who holds the previously printed money. The phenomenon is known as inflation or currency debasement. Fiat also struggles with durability. Your fiat will only last so long as your bank permits, and even then it slowly loses its value. Your bank can destroy your fiat with the click of a button. Ask a Cypriot. Ask an Argentinian how durable fiat is. With fiat, you are ever dependent on a third party with your wealth. Some people are comfortable with it because they trust their government, but requiring trust in politicians seems a poor foundation upon which to build a prosperous society.
If you were a PhD from MIT on the board of governors, or maybe the chairman of a central bank, why would you have anything good to say about gold? You control the printing press. You control money. Anyone who controls money controls politics, controls culture, controls the world to some extent. So this is a very small club. They're all taught the same thing. They all believe the same thing. And collectively, they control not just the dollar printing press, but all the printing presses in the world. Why on earth would they want to give up that power?
Before World War I, each note that a Treasury issued would say that there have been deposited with the United States Treasury $20 in gold coin payable to the bearer upon demand. The money was in the vault. The currency was a note they gave you that was a claim check, only a claim check on the money. The same as if you go to the dry cleaners and you give them your shirt and they give you a claim check for your shirt. The value is that shirt at the dry cleaners, not the piece of paper that says that you own that shirt.
There can be a confusion between the paper banknote that says redeemable for an ounce of gold versus the ounce itself. You go to one of those places, you check your coat, and they give you this paper receipt that says coat number 1234 on it. Nobody would confuse the coat check receipt for a coat. Nobody would think that the coat check receipt could keep you warm when you go outside and it's 15 degrees and the wind is blowing. There isn't that confusion. The difference is that's a paper receipt, nothing more than that. But when it comes to money, that distinction has been rubbed out, and deliberately so, with government taking so many actions, including propaganda in public schools. And so that's the sort of crux of the issue is, with a piece of gold, you own a physical object in your hand.
Going forward, gold is likely to see a little bit of a bid in terms of the percentage of the total world assets that are in gold. I mean, even if it just goes up from, it's a tiny base, so it can double pretty easily. Macro backdrop certainly favors scarce assets. I mean, the amount of debt in the system, the demographics of the system, and technology growth are deflationary, but the policymaker response to that, the large deficit spending financed by central bank, reserve creation, that's kind of an inflationary reaction to those deflationary forces. And so the things that normally benefit from that are scarce assets.
I'm not talking about e-gold, I'm not talking about COMEX futures, I'm not talking about GLD, I'm not talking about ETFs, I'm talking about gold. So gold is no one's liability. I think no one's done a better job than the Austrians of pointing that out. It's the only form of money that's not a liability. You say, what's a dollar or a pound sterling? I learned in the first week of law school, if you have a contract, you're supposed to read the contract. Take a dollar bill out of your wallet, or take a pound sterling, and look at what it says. Look at the writing. That's the contract. It says it's a note. It's a Bank of England note, or in the case of US dollars, a Federal Reserve note. Where I went to law school, a note is a liability. Indeed, if you look at the balance sheet of a central bank, the money that they've created is listed on the liability side of the balance sheet.
So, in an inflationary environment, real estate does well, commodities do well, bonds and cash do poorly. But I think the first step is to make sure you have exposure to some of those scarce assets, things that have kind of intrinsic value, whether they're real estate, whether it's key commodities like copper or uranium or nickel or silver, things like that. Gold for some investors. Basically, it's a claim on something of intrinsic value.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.